They're so-called cat bonds. They've typically been built around natural disasters, and now we have them for cybercrime.
Yeah, it certainly looks that way. And there's been a surge in the popularity of these cat bonds due to the increase in all the natural disasters we've seen just in the past year. Now, with the surge in these cyber attacks, it looks like the hackers are able to hold multinational firms hostage. This can be difficult to insure. And so Bloomberg has learned that at least two firms now preparing to act on the opportunity. Beazley, which owns specialist insurers across Europe and the U.S., is said to be exploring a potential $100 million cyber cat bond. Access Capital is preparing to issue a $75 million cyber cat bond. And the wider market for cat bonds in general likely to reach a record $40 billion this year. That's a huge number. And again, a lot of that growth has been fueled by the impact of climate change. We've seen an onslaught, just almost unprecedented number of typhoons, hurricanes, floods, wildfires here in the U.S. and in Canada and in Greece and in Australia. Again, all of this believed to be due to global warming. And these extreme weather shocks are threatening to make the insurers' business models untenable. I mean, it almost breaks the model. And so for that reason, the insurance market has always offered these so-called catastrophe bonds. It allows the firms to farm out hard-to-insure risks to capital market investors. And in exchange, this is the key part, those investors get double-digit returns. So now that we're getting a storm of cyber attacks, as Paul mentioned, there's Boeing, ICBC, the Australian ports. These cyber cat bonds appear poised to move out of the shadows of private deal-making and into the public debt market. And they're coming out possibly, according to what Bloomberg sources are telling us, with some pretty major issuances.
I just love the term cyber cat bonds. Are they likely to be popular, given that, as you said, they're kind of moving more into the mainstream?
Well, when you look at the returns that we're talking about here, yes, they could potentially be wildly popular. Historically, investors are drawn to any kind of return that trounces those of U.S. Treasuries. And what you're looking at here is the Swiss Re Global Cat Bond Performance Index. It's up roughly 18% year to date. And it's an index that tracks the aggregate performance of cat bonds in the U.S., European, and Japanese currencies. So pretty strong performance. Compare that to the return of the Bloomberg U.S. Treasury Index, which is actually down about 1% year to date. So there's really no comparison. And issuers of cybercat bonds want to protect themselves from financial losses that can follow a major cyber attack. And that includes lost revenue, legal fees, regulatory fines. But it is a new frontier. One hedge fund portfolio manager who invests in cat bonds says there's a lot of data in what returns are in insuring against hurricanes and other natural disasters. There's not a lot of data when it comes to cyber risk. It's much more difficult to price. Still, many investors appear interested in getting exposure to this new area.